With world-class expertise and local insight, Dexus creates value, not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Thursday, the 1st of May. Is it going to be sell in May and go away? I'm Juliette Sarli. Lovely to have your company with you here on AusBiz Streaming and of course on our podcast as well. Let's have a look at where the market has finished. Certainly not selling in May today. It was actually a very good session coming through on the overall market. You've got the CBO there up by 0.5%. When we look at where the ASX 200 is sitting as we round out the session, it's a little bit more of a modest gain, but still up by 0.2%, 8,145 is where we sit. We had a positive, momentum in terms of some of the US earnings overnight, but don't forget as well, we had that sort of worrying GDP print too. Excuse me, I didn't realize I was on camera. With the GDP print coming through, contracting in the March quarter for the first time in 3 years. All right, let's have a quick look then at what we're seeing in terms of the thematics. 5 days of fortunes, of course, a 5th day of gains coming through on the overall market. The Bank of Japan came through and held today, did warn about the overall global concerns, though, particularly as we mark 100 days of President Trump in the White House, the impact there on the overall US economy, which, as I mentioned, is in contraction. And then, of course, earnings bonanza. We had some big names out overnight, including the likes of Meta. Tonight, though, we've got the likes of Amazon, Apple, Airbnb, MasterCard, McDonald's as well. Let's have a look now at how the overall sectors fared, and certainly some solid momentum, I should say, coming through in these tech players. Also worth noting, the likes of Digico was a very strong momentum stock. Data center stocks really rallying after Microsoft and Meta suggested a ramp up of investment in data centers to fund this expanding AI thematic. Also having a look at the gold space today, a little bit of weakness there. Gold prices were lower overnight, coming off some of those records, still holding around $3,300 an ounce, but of course falling through some of those key levels. Energy players coming under pressure too. Saudi Arabia signalling a move towards producing more crude and expanding its market share. We actually saw in April, NYMEX down by 18%, the biggest monthly fall since November 2021. And a quick look at the consumer staples stocks too. Woolies was our stock of the day, and we'll get to that a bit later, but very much the fact that people are looking for bargains, for lower prices amid the cost of living pressures, helping Woolworths with its third quarterly update. Shares actually hitting a 9-month high today. Coles, of course, came through with its numbers yesterday, and interestingly as well, the amount of people doing their groceries online now. Woolies actually saw a near 16% increase in e-commerce sales. They are still seeing, though, a bit of weakness in their clothing business, so the likes of Big W and also Petstock as well. All right, having a look at some of the other stocks that we are watching. These data centers, as we mentioned, with Microsoft and Meta forecasting growth. Goodman, Next, DTC and Digico all at a 5-week high. And DUG Technology soaring on strong third quarterly results. Judo Bank, though, was in a halt for a while. Then it came back online, plunging by 16.5%, issuing a surprise third quarter trading update, warning that lending growth would be lower than guidance provided in February. Also having a look at Platinum Asset Management soaring up by more than 12% on merger talks with L1 Capital. HMC had a good day as well. Goldman Sachs thinks that this diversified alternative asset manager could be an ASX share to buy in May. And of course, we're looking at stocks to buy, especially amidst the statistical likelihood that it could be a tough month. Air New Zealand up by 1%, aiming to reduce its greenhouse gas emissions from jet fuels by 20 to 25% by 2030. Sims also in focus, shelving its WiseTech project. It says that'll cost it about 25 million. Resolute Mining having a little bit of a weaker session. It did acquire, though, 2 Ivory Coast projects for 150 million. And an update in the retail space, Baby Bunting having a good session, up more than 7%. It saw a near 4% rise in second half comparable store sales. Let's get his take though, and welcome to the COB, Mathan Somasundaram from Deep Data Analytics. Good to see you. And well, I guess speaking of data, these data center stocks rallying after Microsoft and Meta announced that plan to really ramp up spending here.
Yeah, I'm always surprised how everyone's surprised by that. I mean, we've had a year and a half run on AI, and you can't have AI without data centers. It's like no horse, no point having a cart. The data centers were always going to play out, and I can see even we're starting to see a fair bit of optimism returning into the uranium sector with nuclear power, obviously with data centers, the energy requirement, and all that. So all the ships are rising with the rising tide, and Microsoft is the main play. They're really well run. I think the cloud growth is not really shocking. No one should be surprised by that. And I think it's a solid play. So that kind of improved the sentiment, and every angle of, I guess, data center is getting a bit of a boost today.
Indeed. What other sort of momentum took your eye today? Obviously, we've been following what's happening with Woolies and Coles, and I guess this is the defensive aspect that we've spoken about before too, right? We still need to eat despite what else is happening in the world.
Yeah, I mean, the staples are holding up really well, and the context of defensive yields, so large cap industrial yield plays, they're all getting the interest. So whether you're looking at gas utility like an APA or a rural fund, and you look at supermarkets like Coles, Woolies, they're all getting the interest because at the end of the day, they tend to accommodate for rising inflation and rising prices, and they're very good at holding their margin despite that. So those kind of defensive yields are perfect for this kind of environment.
We talked about the data centers, but more broadly, when you look at the tech space today, I mean, a really encouraging spot. Is that something that maybe could be a good buffer as well when you look at the statistical likelihood that maybe May isn't going to be a great month?
Yeah, this is going to be interesting because the bounce in the US market is predominantly driven by tech sector in the last couple of weeks after the big fall. And that was driven dominantly by buybacks, and the US mega techs, they've got more cash than the banks. So they have huge buybacks. And despite money flowing out of the US market, the buybacks have driven quite a bit of outperformance. So that's kind of set the tech sentiment. And we've had a pretty good results out of a few of the big techs, and that's kind of played through as well. So there's a couple of things playing out. I think tech is an interesting sector for me because we like part of it because some of the tech stocks have just been thrown out, classic baby out with the bathwater stuff. And some of the other ones are trading at, phenomenal multiples. I don't want to chase the phenomenal multiple, but beaten up tech, some of them who are structurally sound and have a pretty good business model and a moat tend to look pretty interesting. I mean, you're going to take a bit of a, people were chasing stocks at 4 or 5 times what they're trading on right now in some of those beaten up tech stocks. So if the story holds, I think some of these turnaround tech stocks on a longer term view looks pretty interesting.
What are you seeing when you look at CBA? I mean, every single person is saying sell this, and I know we've talked about it before, but the naysayers, maybe they've got it wrong.
Oh, look, CBA is the biggest stock in our market. So it basically is the defender for the passive money against market volatility. So, in our market, our market and US market are two unique markets where a handful of stocks own about 20-30% of the index. So it's very easy to manipulate the market by passive money by just buying a handful of stocks. And in ours, the biggest one is CBA. So if you look at just in the last couple of weeks, when the market is up, CBA is down. When the market is down, CBA is up. Because it's an easy way that the big money players can move in and out of CBA. It's quite liquid. Look, you don't need to be a bank analyst. If you look at any multiple, CBA is expensive. Does it matter? Not really. At this point in the cycle, it's about the passive money. Till they decide to get out, CBA will hold up. The simple thing to look at is what are you buying CBA for at the current price? If you're buying it as a yield play, it's not a great yield play. You can buy Telstra, you can buy APA, you can buy Woolies or Coles, and you'll probably get a better yield and with the growth attached to it. CBA has basically no growth. It's the best of the big four, but it has no real growth. So in that context, it's what you're buying it for. But most people who are holding CBA have held it from a very low price. They're getting a massive dividend, and in context to what they paid for. So, and they have tax implications. So no one's going to sell in the retail space. Fund managers don't really hold much banks. So unless you're an index fund, you're not holding much banks. So in context, people who are there probably not going to move. But eventually, because of the basic flow of global funds, eventually the passive money will flow out of Australia, and that'll hurt CBA. But you got time. But if you're a retail investor and you've been there from very low price, you really don't care. If CBA drops 20, $30, so be it. You're still getting a good yield, and the government backs it. So the big four are not going to go down in Australia, so you're okay.
All right, let's talk about the US session because, we saw the economy contract and we mentioned that we had some big earnings from Meta and Microsoft. Tonight's really interesting though because you've got McDonald's, so maybe that's holding up well amid the cost of living concerns. And you've got Eli Lilly, which is of course the weight loss drug maker. Kind of really differing stocks there, but maybe both are going to do well. Then you've got the likes of Amazon, Apple as well.
Yeah, it's fascinating because this week is probably one of the biggest reporting season weeks in the US calendar. Going from Macca's and Eli Lilly, we've had Taco Bell, which obviously struggling in Australia and obviously struggling in the US. Chipotle didn't report that well. Macca's historically has been struggling globally, so I don't think it'll be a great result, and I think that's probably will continue. But then, we've got players in Australia who seem to think that they are high growth stocks because they're going to expand globally. So it's a tough market in that space. On the flip side, you look at Amazon, it's a fascinating stock because we've just had the White House media person call them having a political hit job because they actually showed the tariff tax on purchases on Amazon website. So that's been pulled back from what I hear. Things change on an hourly basis in this politics. But so it's going to be fascinating. Their main moneymaker is AWS. It's a data center play. So in context, that's where they make most of the money. But the politics of it is going to be interesting. How they give guidance, given most of the things they sell on Amazon website is made in China, is going to be quite interesting. So I'm fascinated to see. The other one is, as you said, Airbnb. That's going to be interesting as well because every statistic of tourism going into US is collapsing. So what commentary comes out of that and how the tourism sector is going to react to that and all of those things will be fascinating to see as well. So I'm not getting a lot of sleep nowadays.
Yeah, I can imagine. All right, well, Mathan, we appreciate your time on a busy day. Thanks so much, Mathan Somasundaram from Deep Data Analytics, of course, a good friend of AusBiz. The stock of the day was Woolworths. On the call, Andrew was joined by Grady Wolf from Bell Direct and David Lane from Ordminet.
It was slightly better than expectations, but a little bit below Coles' result announced yesterday. And I think that's probably a little bit of the sign of what we've seen over recent times is that Coles seems to be outperforming Woolies. You mentioned the W Living division was, I suppose, the negative in the result. Their food business is going quite well, but Big W and their other smaller businesses aren't doing as well.
Coles is our pick of the choice as well. I did a bit of research in a unit at uni actually on Woolies last year, and Woolies was the pick of the bunch back then because they had this pet division that was outperforming and doing really well post-COVID. Everyone seemed to buy a pet during COVID as their new companion for working at home, but retail spend in the pet division, as we've seen, they've started divesting some of their stores in the pet stock area and some of the vets that they owned as well. So we're seeing a bit of a downturn in pet spend right now. And that's really not doing very well for Woolies. They also had that industrial action that David mentioned, which really hurt their earnings in, I think it was the first half.
All right, let's have a look at the market leaders on another positive session. WiseTech Global, we mentioned a lot of these tech and data center stocks really getting a positive boost on the back of Microsoft and Meta, and also, of course, the fact they suggested this ramp up of investment in data centers. So all of those stocks having a great session on the back of that. The laggards, though, Judo Bank was halted for a while, and then it came out of that, falling by almost 17%, issuing a surprise third quarter trading update, warning that lending growth would be lower than the guidance that it provided in February. We also had weakness from 360 Capital, Westgold Resources, IPRNX, and Vulcan Energy. In the small end of town today. Now, Demerix, we spoke to them, really interesting stuff. We also spoke to Race Oncology, so do make sure that you catch those CEO interviews that have just come up online, I should say. Demerix inking a key US agreement, and Race Oncology is moving forward with a treatment to better cure cancer. Platinum asset, of course, that bid from L1, AMA, and DugTech also in focus today. To the downside, in the small end of town, 3P Learning was off by 18%, MTM Critical Minerals down by almost 11%. Now, we mentioned, of course, a lot of US earnings coming through tonight. Some really big names. It was great that Mathan just went through them all for us, but Airbnb, Apple, Amazon, Block, which is of course dual listed here on our market. Then you've got the likes of CVS, Eli Lilly, the Monjaro maker, MasterCard, Reddit, Roblox, and of course, don't forget McDonald's. McDonald's is a very big one as well out tonight. All right, US unemployment claims also due, expected to increase from 222 to 224,000, I should say. That's according to Forex data. The ISM manufacturing PMI for April, Westpac reckons that will dip, I should say. And looking ahead tomorrow, we've got retail sales for April forecast to increase 0.4% month on month. And the quarterly PPI data on the back of the CPI we had on Wednesday, it is expected to have increased by 0.8%. Let's have a look at where the market is tracking, 0.5% higher. The ASX 200 finishing the session up by some 20 points, or 0.2%, 8,145. So it really is as if Liberation Day didn't happen. We're back to those 2-month highs. HMC was the front runner there on the ASX 200, and Judo was the laggard. All right, we will be back to do it all again tomorrow from 9:45 Eastern. We'll see you then.